Let's get to Kevin Green, senior markets correspondent, who joins me now to get across some of these headlines. And obviously, we're learning about the developments around the potential for the shutdown to end. What does this mean for the markets, KG? Because I feel like we've been speaking over the last month how investors have largely been looking past some of the worries, but last week it seemed like we had started to see some material impact coming through in the consumer sentiment numbers, etc., and perhaps weighing on the minds of investors. Tell us your thoughts this morning.
Yeah, obviously, we are seeing a lot of reaction and positive reaction because of that Senate procedural vote yesterday, which did pass 60-40 to try to fund the government up until January 30th. Now, also within that measure, what's actually very interesting, those SNAP benefits, which has been a really big key issue in order to try to reopen the government, they're actually going to fund that till September of 2026. So even if we do see another shutdown in January or after January, that will not actually be impacted. There's some other parts of the government that's also going to be funded as well. But we still have this hurdle when it comes to the ACA or the Obamacare subsidies, if you will. That's still going to be a very big issue leading into December. But we are seeing maybe an impasse, at least for now. And the markets are rallying on this. Now, I will say, if you're kind of looking at the positioning for this morning, Sam, we had around 46% of the stocks in the S&P 500 in the green to start off today's session. It is starting to wane a tad bit. So we are starting to see maybe that concentration type of trade coming back into the picture. The Mag 7 are definitely leading the way. Chip stocks moving to the upside fairly aggressively. You can even look at an Amazon or a Tesla that's actually catching a bit as well. But we do have some green on the screen. Hopefully, we're going to be able to hold this one up. But the government shutdown potentially coming to a pass here over the next couple of days, obviously, is welcoming news. You are seeing yields, for the most part, kind of selling off here a tad, or moving higher, meaning treasuries are selling off a tad bit, rotating into those equity markets here. But we still have some areas of resistance to the upside that we'll probably talk about here in a little bit to be mindful of. But for now, we have a risk on sentiment in the market.
We do, and no doubt being helped by some of the bullish comments out from Nvidia's CEO as well, Jensen Huang, talking about the fact that they need more chips coming from TSMC. Now, we did have some sales numbers out of that company just overnight as well, 16.9% for October, which is the slowest sales growth in more than 18 months, but almost 17% growth is still nothing to scoff at.
Yeah, and these comments obviously on the back of Jensen really trying to thread the needle when it comes to China relations as well as U.S. relations. But he obviously talked to some executives from Taiwan Semi, and really talking about the fact that growth for AI is continuing to accelerate on a month-over-month basis, and they're going to need to have more chips being produced by Taiwan Semiconductor. And that's obviously giving not only just that bullish tone when it comes to the tech space, but also when you're looking at the memory names, the Western Digitals of the world, Microns. They really did not see a pullback last week. Those are companies that have been valued pretty cheaply compared to maybe some others in the space, and it continues to be a catch-up trade that a lot of traders really do appreciate, at least at this point in time. And we are not seeing it when it comes to the fundamentals of a lot of these companies, especially when you're looking at the mega cap names. They're still spending on CapEx. That should also obviously increase demand when it comes to Nvidia, and that also should translate to Taiwan Semiconductor as well. But if you even take the AI trade out of it, are we seeing maybe a refresh cycle when it comes to consumer handheld devices, the Apples of the world, the iPhones, things of that nature? And if that is also taking place, that's actually a margin driver for Taiwan Semi. That's where they make the bulk of their money when you're looking at profitability. And that also could be a tailwind for them over the next year or 2 years. So this is a company that's been able to perform. They obviously have a little bit of a monopoly in this market. And the comments that we heard from Jensen over the weekend here is just a testament to their stability, if you will, when it comes to the overall AI trade.
And you mentioned some of those memory names as well, KG. I mean, I'm just looking at a chart of SanDisk, for instance, which has had a price target boost out from Barclays this morning. I mean, $220 from 39. That's a significant jump. I mean, this stock is up over 600% year to date. And, I was just looking at the Asia performance as well. You had names like Samsung, SK Hynix, Kioxia up 11% over in Japanese trade as well, one of the biggest movers on the Nikkei. So, I mean, these have really been on a tear lately off the back of this whole idea that, as you mentioned, this AI hype and boom, the massive capex that we're seeing is going to fuel that demand for the memory. And that's leading to tightening supply and also, higher prices. I'm actually seeing that Seagate, according to one report, I should say SanDisk, has actually upped its prices on NAND as well. So talk to us about this trade.
Yeah, so the memory business, if you're looking at it over the long term, it's very cyclical in nature. And what we actually have seen over the last 5 years or so is a glut of inventory for a lot of their customers. And that's what's actually was pushing prices down for a lot of these memory providers. But now you're starting to see high bandwidth memory really coming into the ecosystem for artificial intelligence. And a lot of these data center providers and builders are seeing that the more memory you provide, actually the more efficient your data center is going to be, more efficient your models are going to be. And that's why they're catching a bid. But also, if you're talking about a lot of these names, SanDisk, Western Digital, Micron, these are names that were heavily shorted over the last 2 years as well. So not only do you have that fundamental picture that's starting to kind of pick up steam and pick up a little bit of momentum when it comes to demand, but you're also getting that short covering squeeze taking place as well. Maybe a little bit of memification, if you will. I hate kind of using that term, but you are seeing a lot of traders starting to pile into these options in order to try to squeeze prices higher. So at the end of the day, over the long term, Sam, as you know and I know, memory is still cyclical, but for now, there's an intermediate demand that is taking place here, and a lot of these companies are benefiting from that.
Yeah, and it's interesting. I was listening to one report actually out from the South China Morning Post as well, that up the road in Shenzhen, there is a major electronics sort of type of wholesale market. I don't know if you've been there or at least seen documentaries about it. I know that a lot of the videos from there go viral because they sort of pull apart gadgets and stuff. And they were saying how the memory prices at that particular place was actually going up. And so they're thinking maybe the memory products could lead to higher consumer electronics products as well, which is certainly an interesting story, I think, to track. But as you say, cyclical in nature, and there's some other technical factors going on here as well. Just switching gears from the chips to the commodities, what are you seeing as far as that space this morning? Because I know there was a lot of sort of moving parts for the energy space last week. What stands out to you this morning, KG?
Yeah, a lot when you're looking at the commodity space. I think the first one that I'm focusing on is natural gas. It actually hit $4.50, but now it actually has moved to the downside fairly aggressively. I believe we actually looked at this chart on Wednesday or Tuesday of last week, Stan, but you are starting to see that fade for natural gas. A little bit more overvalued when you're looking at the demand picture as well as the supply picture. You are also seeing a little bit of a reversal when it comes to crude oil. And then when you're looking at the metal space, metals are catching a bid. Gold hitting the 20-day moving average right now, trying to potentially recapture new all-time highs here over the next couple of weeks or so. Let's see if that's going to take place. Silver also up around 3%. Silver is now considered to be a critical metal, so that is going to be something that could actually spark some demand from the government standpoint, maybe some subsidies when it comes to a lot of these miners, the copper miners, gold miners, silver miners, and things of that nature here, and you are seeing that catch a bid. So when you're looking at the risk-on nature of this market so far for the equities, and you're seeing that correlate to silver moving higher, that does mean that obviously we are getting some optimism, at least for now, and maybe some short covering taking place here. And if we are going to see this dynamic where the government reopens, we do have the Fed that's going to be a little bit more favorable when it comes to rate cuts over the near and long term. That could keep inflation relatively high. Hard assets, especially on the commodity front, to generally perform pretty well in a high inflationary environment or even a sticky inflationary environment. So that could be a situation where that becomes an opportunity for investors and traders in 2026.
Okay, and obviously we also have the US dollar taking a little bit of a breather this morning too. Fun fact, the S&P did close higher each of the last 9 Mondays, according to Jay Woods. I don't remember what I had for breakfast, let alone what happened every Monday for the last 9 weeks. So I'm going to take his word for it. But we've had over 90% of the S&P reporting so far. We've got some big names coming up for us this week as well. But what are you watching as far as those levels on the S&P 500, KG?
Yeah, to the upside, I'm actually still looking at this 6830-ish area as your major area of resistance. If we're looking at the E-mini S&P 500 futures, and I think this is going to be actually a really decent chart for us to kind of talk about, well, we have something called an anchored volume-weighted average price, or anchored VWAP, that people actually kind of talk about. If we look at those highs back on around the 28th or so, and you have this anchored volume-weighted average price, it's a moving average that also leverages volume in order to calculate this. We're pretty much hitting that area of resistance right now. So if you are a short, or if somebody is looking to short this market, this would be one of those short zones that you could see a pullback. Very hard to do, especially with that hammer candle. This one's a little bit more of a fly. But if you look at the S&P 500, it's a hammer candle. That was also a bullish signal. So right now we have a little bit of a battle taking place. What you would like to see if you're a bull is not only us advancing in the S&P 500, but that market breadth expansion that we saw on Thursday and Friday following through today and tomorrow. You don't really want to see that concentration risk happening again, especially leading up to Nvidia earnings, which is going to be next week on Wednesday, if I'm not mistaken. So a pretty decent technical setup taking place. Let's see if we're going to be able to hold these levels. You want to see volatility crush below that 17 level. If you're a bull right now, it's still a little bit elevated here, but this is a good market in order to get some intraday plays in, because once again, volatility is still a little bit elevated given the market move that we're seeing this morning.
Okay. KG, thanks so much for that. Really appreciate it as always. I'll chat to you a little bit later on coming up.